What's going on, traders? Hope everybody's having a great evening. Thanks for taking the time for joining me on this video analysis of the S&P 500, the Spider ETF, our midweek recap. And we're going to be, of course, looking at where we may want to engage the market, manage our risk, and what to potentially expect coming into the back half of the week here. And of course, this video is for educational and entertainment purposes only. In no way should be viewed as financial advice. So with that out of the way, let's dive into some charts here. Obviously, markets were down today, down about $6 or so, just a little bit over, negative 1.44%. Final print came in at 417.55. Now, we did have a Meta report in after hours today. Of course, Google reported yesterday, and Microsoft as well. Google really did take one on the chin. Had one of its largest down days. I forget the stat. I think it was it might have been all year, but that certainly helped drag the market down today and kind of canceled out what gains Microsoft provided for the market. I'm just taking a quick look because I didn't see actually how Meta closed. It looks like it closed down, so but I don't think it hit the market maker expected move, which was, I believe, about $25. I'll have to look back, but it doesn't look like it really reacted positively to the earnings report, so we will keep an eye on that as well. But this video is not about Meta, it's about SPY. So let's see what's going on from a trend perspective here, and our candles, and what to potentially expect for the back half of the week here, and some things that I will be watching out for. All right, so the first thing is on Tuesday, I was feeling a little bit more hopeful about the chance of a little bit of a stronger counter trend rally. We did close back above this 200 simple period moving average. We closed back within 50% of Friday sessions range, so things were looking a little bit constructive. Now, certainly we had this potential kind of bear flag forming, and we know really where the current of the ocean is at right now, and of course that's down, right? That should be obvious or rhetorical. But now we have finally put in this new lower low. Now, tomorrow, futures right now actually in Globex are really taking a dive. We're actually down about 28 points as I'm making this video. But either way, I'm not going to be too gun happy to go ahead and short right at the open, right? What do we want to wait for? Some type of retracement, and we don't chase a market that's down, which is probably going to open up on a gap down, with Globex being down 28 points. But that doesn't mean to full port into longs by any standard either. You have to be tactical on the timing, and of course cautious on the sizing whenever taking any counter trend trades. And of course, we've been over this before, that if they don't suit your risk tolerance or your preference of trade, just wait for the back test and take the short. And you don't have to catch every wiggle in the market, and we've been over that before. It's not our jobs. Okay, so what is going on now here from this perspective? We opened up on a gap down, just continued down lower, and now we're starting to get to an area where and we've talked about me kind of postulating that we're going to come into this 411, 410 area, 415. These are downside targets that we've been talking about for a while now. But as far as being, again, a new money short in this area, no, it's just the risk to reward is not there. And we've also been over, this structure retest, right? We've talked about kind of inverted head and shoulders that gave us this beautiful rally, and now we're starting to really come into that general area where we just want to start to be extra cautious. We're almost, and I think actually if I go into the 180 day, because since we are selling more, here's actually just a picture of what the market looks like right now. With they're calling that 415 target right now. It's actually hitting 415. But you can see here where we're starting to enter this area, and this was again what we were talking about coming into that prior zone of accumulation that we saw from springtime, right? We're almost there. We're pretty much there. So just have to be extra tactical down in this area for sure, in my opinion. But this, we're starting to see our downside targets really come to fruition here, and that is nice to see. However, as I was mentioning, it doesn't mean I'm going to be running and shorting right at the open tomorrow. But as it stands, I still think that we potentially, as far as the trend sequence is concerned, maybe this was it, but I still think that there's a chance that we could be making due in for another lower high to come in. And then we'll push down to those final targets. So let's just watch out. Now, it doesn't mean I'm going to be swinging calls anytime soon or anything like that. I'm still writing actually a little bit of some puts on some options, but you just want to be careful. Overall, that's the main thing. So let's take a look at some other charts here, and I usually like to look at the weekly, after we see the print, but I still want to point out here, we're starting to still peak into those oversold conditions. We're not really there yet, but something that we have been kind of keeping our eye on, and so we'll see how this develops overall. But very interesting here, now that I'm just coming back over to this 3-year weekly POC sitting right at 415, so right where we're trading actually in after hours, or if you want to call it that. I think that's kind of curious and very very interesting. So we're gonna see how what happens when we open up. I just actually want to throw this into a 2-year just to see how much it changes. It's pretty much all in that same zone. All right, 2 years in the 410 area as well, and the daily is at 411. Okay, so getting very interesting as we're coming into these high volume areas. But let's take a look at some other charts and see what we can take away from that. All right, let's see about our downtrends here that we have been watching, our downtrend channels. And you can see basically here we had a fake break. We had a fake break over this trend line here, and then we gapped down back right into, and now where's this? Our close was 417. So we're right here on this next. And what is this low here? This low is 417.80. Okay, so we're right still in this general area. We might be a little bit low. I'm gonna be lower. I'm gonna watch for tomorrow on this macro type of situation. Maybe I'll throw it on a 1 hour chart. And actually, let's just look at it right now. If I see the safer long, if from my viewpoint, would be if we start to print like an hourly, or even better, a 4-hour type of a hammer, and we actually recapture this trend line break. Feel a little bit better about a long type of trade at that point. Certainly safer, but even from this hourly perspective, you've still got a very clear short opportunity here. Now, of course, the moving averages are dynamic, but one could think that trading back up into this 416 area, right? Like this, we back test the trend, and then we actually, and then we continue back down in the lower direction. Today basically was a trend day. I mean, we were looking at the hourly candles here, all red. So, really, really, how should I say, pathetic job by the bulls today. But I forgot what I was going to say there. I'm sorry. But again, I would just be very careful of shorting the whole. Again, you just got to wait for a potential retest. And I know what I wanted to say is going to come back to me here any moment. So I'll just going to give that a second. But we certainly are oversold here on the on this hourly. Of course, that doesn't really mean that much. It can stay that way, but just another data point that we want to be cognizant of. So yeah, if we do start to recapture here, I think that's a little bit of a safer long. Certainly if we get back inside of this hourly value back over 417, sure, we can look at that. Possible areas that we could retrace. We'll look maybe for that 25% retracement. I mean, maybe back up. A logical place would be back up to the close, depending on where we open. So, if we open down 414 or something, I mean, it would make sense from, just a technical standpoint to come back at some point and retest, the prior day session lows. So we will be watching out for that. But needless to say, certainly the ball is in the Bears' court still, and Bulls are hanging on to dear life here. So, all right, let's look at some other charts really quickly. Now, I remember the other thing I wanted to say. We were down 4% today, or 4% today. However, and we're going to go over this. We look at the breadth, yeah, the outflows here, the VOLD definitely down. We were in trend lower pretty much all day on the ADD. But, the Dow was holding up pretty decently. I mean, I've seen this down -2, 12 to 15 to 20 to 1 before. QQQ obviously really taken on the chin. This was really, accentuated by Google, of course. But, the breadth readings, they were bad, but they weren't horrible. So, I think a lot of the downside move today was just because of that, the Google and that high beta that it has in the market, really not making things pretty. And of course, the names like Apple and Google have such a heavy weight in all the indexes. So, but we've seen the market down 2%, 2.5% before. That's a real strong trend day. Again, I'm not suggesting, that we're gonna, that I'll be hammering longs crazy or anything like that. But I just wanted to kind of say, I still think that we have a chance on the daily to make a lower high before actually just continuing. But I mean, just from this technical standpoint, of course, on this trend line, that back testing this trend for the short, it makes sense, totally. But on a gap down, we'll have to see. I'll just be very, very careful about chasing shorts. So, all right, let's take a look at some bigger picture fibs here. Hold on, where are we? Okay, here we go. All right, so from this perspective, now you can really see what happened here. This was our prior structure break, right? This is what caused this rally. And what happened here, really all we did on the session from the 24th was come up, back test those highs again right there at that 618 couldn't get over 425. No recapture of that key level. That really would have been what the bulls wanted to see to continue a potential move in the higher direction. And I was really thinking, based on Friday, excuse me, based on Tuesday's close, that we had a chance, to make it a little bit, make it higher. Now, as it stands from here, we could still now see some chop. It looks like we're gonna pretty much open right here at the 7.86. So, word of caution again, just from this bigger picture fib view, if we go in and just look at where the market is right now, we're trading basically right at it. Okay, so risk to reward from that perspective, it's not very good. If one was going to be looking at some type of a swing trade, again, maybe we would look for some type of a triple top and just see how the market either reacts when it comes back to back test maybe the 200 SMA here, which is sitting at 422.83 as it stands, or looking for another move back up into the 425 area, and then look to see how the market reacts there with selling pressure, and then make a decision. As it stands, I mean, if this was coming up right now, obviously this 9 has moved down with today's move, but if I was just sitting here right now and this was normal market hours and I saw the market moving back up into that 425 zone and I saw the confluence with the 9, okay, that's a trade I'm probably going to take short for a swing 9 times out of 10, and certainly be targeting where we are trading right now, down in those 415s area, right by this 78.6. So, but as it stands, we're sitting right here right now. So, like I said, be very careful on that. The other thing I will point out from the sell-off that we had last week, look at the sell volume. Sell volume was strong today, but it really didn't get. It wasn't. It wasn't overwhelming. So I think that's a little bit interesting as far as where, as far as that perspective. Yeah. So. All right, let's take a look at some of our other charts. I mean, this downtrend channel that we've been watching, excuse me, this major uptrend channel has been clearly taken out now. There's no question about that. Bulls had a few chances to recapture, and they just really have not been able to. I made a video on Tuesday, not publicly, but I was saying here, based on that close, I thought we had a chance to make a move up into the 20 at least, to back test again this trend line, and potentially then make that bigger move. We didn't even get close to that area. So as it stands though, from this bigger picture perspective, we'll also be looking obviously still short biased overall, but on the swing lows for October, as long as we stay below the swing lows, there's really no reason to think about any bigger picture longs, and even then they recapture, sure, but we could just come back up and trade, test the 9, test the 20, back test this major trend line, and then just head back down. So but as it stands, as I mentioned, staying under the prior monthly swing lows, short, no reason to go long from a technical standpoint at all, according to this chart. Now, obviously, we want to tread lightly, as I was mentioning on the other chart, since we're coming into that major structure retest. But ultimately, I've been over this. I think we're coming back down into the 410s, 408. I just don't know how far down we're going to come back into this accumulation zone. All right. Do we have any other daily charts I wanted to take a look at? No, we'll save the weekly fibs for the weekend. Let's take a look at this big picture chart, see where we are, if there's anything we can take away from here. It doesn't look like it. Oh, that must be my futures chart. Okay. Never mind. All right, I think that's it. Okay, the other thing that I wanted to go over before we go over a couple of other charts. Now, we were watching, I posted this on my Twitter. A couple of things here. One, I'm not really, for any pattern traders, you can look at this like an inverted cup and handle, right? Or type of a rounded top. So for anyone that trades like that, certainly a pattern that kind of revealed itself here. But for me, really, I'm looking more at this like a kind of a type of a rounded top type of scenario. But whatever you want to call it, this was the week's range over the last 2 days of trading. So another thing that I will be looking for is the potential of the back test of that trade. Now, again, you got to pick your shots, smaller size with any counter trend trades. But to me, it's again seems logical that at least maybe over, I don't know if it'll be tomorrow or Friday, but that we would come back and retest the last 2 sessions range, and then from there we can look for a nice short trade in that 417.80 area, maybe 418. I'm not sure, how high we're going to get up, but as it stands right now, if we were trading and the market was open, I would be sitting there waiting. I don't know if I would take the long, but I would be sitting there thinking, okay, gosh, if we came back up and retested, look at the confluence here again, just like we were talking about on the daily chart earlier when looking at it from the fib perspective. We've got the 20 right here. We've got a back test of the week's range. Price comes up right here. Boom. Take the short. Boom. Okay, that's a trade that we're going to be looking for, tomorrow or, Friday, something like that. May present a really nice opportunity. So something to watch out for and would make sense to me from a structural standpoint. So, all right, let's go into some of other charts. We already kind of went over the outflows here and the breadth and the ADD. So I don't think there's too much more I wanted to cover from that perspective. Let's see where we open up, if we can open up, above zero or on either of these, and then maybe we'll have a little bit more of a clue for some type of a counter trend trade, but we'll have to see how that looks in the morning. All right, so let's start to take a look at some of our other charts here. Let's first go into VIX. What are we seeing on VIX? And we'll look at the put call ratio, and then we will start to move on. All right, so VIX obviously had a couple of days down where we saw an attempt at moving higher here, but as it stands, nothing's really changed here. We're still holding over, and I think on the weekend video we were talking about watching from that trend sequence perspective of coming down, retesting into this 1990 area, but really from the trend sequence, we made our higher high, we've rallied up, right? And now what's going on? We had to come in, make a lower high, and now potentially we will, as long as we stay over this area, we're going to come in, and the next sequence would be to create a new higher high. So let's watch out. As long as we hold over this area here, my next target on VIX is going to be up into this 2360 area thereabouts. So and that would give us the new higher high. We'd feel a little bit more confident on it, of course, if we see a close up there, but we'll have to see how that candle prints. Put call ratio came right into our kind of our how do I want to say, homeostasis, and showing a big move to the upside here for a lot more of the puts being loaded in. But we're not in any extremes here, so plenty of room for the market to get overbalanced. You can see obviously what happened when we start to really get too one-sided as far as a direction in the market. We're not there yet, so no extremes here to really speak of. and we'll wait and monitor that to see if we start getting up too high, and then we can start thinking about looking for some other contrarian signals. But as far as this is concerned, nothing there yet. All right, let's take a look at some VIX futures and some VVIX here. Okay. All right, VIX futures, interesting. Okay, they just went down just a little bit, but we were back over the zero line again, and they did sell off a little bit. Well, I shouldn't say sell off. They don't really work like that, but they did come down a little bit, and now bouncing back. We were back over the zero line, and that's really not what you want to see for a risk perspective. But now we're back under. We'll watch to see how this works if we stay in contango or backwardation. It's kind of at an interesting spot now. Same thing with the VIX 9-day versus monthly. It's kind of neutral, right? We're still just not above this zero line, so I'd have to get over that for a little bit more oomph for the bears. And the other thing is here on the VVIX, we were watching a little bit of a potential bull flag to form kind of in this situation. We wanted to see, from the bear case perspective at least, we wanted to see us hold over the 105 to 103 area. This ended up finishing the day at 102.92. So I mean, basically 103, but not quite there. Gonna watch to see if tomorrow's session, if we actually do start to close back over this area, that would be an ideal situation for the bears, holding over that 105, 103 zone, and we will show that as another sign for more weakness to come in the markets. And certainly if we stay over zero, okay, here we're back over zero again. But as long as if this gets back over zero and we start to see the 9-day and monthly back over zero, but I'll be keeping an eye on VVIX here, and looks like this the future is still moving up. So not what the bulls want to see. All right, let's take a look at what's going on from our perspective here on the percent of companies that are traded over their 50-day simple period moving average. Kind of the scenario we were talking about coming into that 30, and that kind of being the high before coming back down, is playing out. It's kind of flat here, to be honest. No real change. We're going to monitor this if we start to get into those real extreme type of situations. Yet I think the big thing, though, which is more telling to me, is the percent of stocks now that are trading below their 200, really coming down quite a bit now. Only 27% are over their 200. So this is a little bit more of a drastic move in my eyes than the 50-day. We really don't want to see this for the bulls, as that 200 is really such a key moving average that everybody's watching. But truly here you can really see this kind of, if we were to chart this, the structure break at this 36, right? Kind of came up, double top there, and now we're done for. We'll keep an eye on this, potential area where the whole market may find some bit of hope. We'll see if this starts trading down into the 24% zone. And then, maybe we could talk about seeing something coming for the bulls. But as it stands, these are all looking terrible. So, yeah. All right. Let's take a look at new highs versus new lows. Well, it should be kind of no surprise what we are seeing here. I believe we were talking about that potential move of coming back up into this area here. We had it marked off in this negative 253 area. It's pretty much exactly what we got. Coming back up, tapping it. Now we're back down. Yeah, this is again the same thing. This is really not what you want to see from a bullish perspective. As it stands, it's gonna be really tough to sing anything about being bullish, or really looking for any bigger counter trend move. Until at the very minimum back over this negative 253, and even then that's not very we're still negative 250, so the bulls really gotta get over zero, so we got a lot of work to do from that viewpoint. But like as I was mentioning, doesn't mean we can't play a long trade to back test some prior structure and then short the hell out of it, right? So all right, let's move on here. I think that's all I've got for these charts. So I think we're done with our internals here. Let's go back over and let's take a look at our old friends. Let's take a look at TNX. What were rates doing today? Making a very strong move to the upside. They were up about what is this? Almost about a 2.3% today. Let's go back to our daily here. You can really just see this parabolic move still continuing, will not let up. We did get a little bit below this the 48.6 area, but really what happened, we just came into the 9, and now we're just seeing a big move back up in the upside direction. So what could potentially happen here? Let's see if we do start to see any cool off over the next couple of days. I'm wondering if we get some prints and just kind of do a little bit of sideways movement here, but as long as we're staying on over 49, nothing really to say about this cooling off. And even if we got under 49, we're just gonna look back to where we bounced, right? And then even under there, we're just going to look back to 48. So, but as it stands, I'm wondering if we just hang out sideways here like this and maybe form some type of a flag consolidation. And then we come back up and basically come in to test these equal highs basically at 5%. But the thing, we have to go back here, and a lot of us haven't traded in this type of market before. But to put things in perspective, they're not going to let me do a max. I want to do a max. Hold on. We've been up in this area before. This is back in 2008, 2007. Okay. So markets have been in this. I mean, look what was this? This was in 2000. This is probably the .com bubble times. Look how high we were up then. So we have been up here before. It's just not something that I think newer traders have accustomed to being participating in the market with. And we will watch, and I'm going to, over the weekend, I'm going to kind of draw out some areas where I think, we want to be watching. But obviously, we're going to be keeping an area as we kind of start to move into this 5% zone. We've seen some interesting reactions in this area here. So I'm going to go over this over the weekend. But I'm just going to throw a flyer out there and kind of put us in by this potential, this double top that we saw. But I'm going to mark out some new levels here for some more potential upside targets. But let's see. We're coming into a very interesting spot here where we've seen some big turns in rates before. So until further notice, though, in the short term, we're just going to go by our levels. And as long as that 49 holds, it's all is clear for these just to keep on going. We're going to see, though, because I think the Fed watch, they're probably going to pause at the next meeting. So that will be interesting to see what happens. But I think the Fed Watch tracker has said that it is a high probability of a pause. I think it was 98% or 95%. I'll have to look back. All right, what's going on in dollar land? Okay. Now, in the dollar, we were talking about. Oh, looks like they're fixing the candles finally here. Now, in the dollar, we were talking about that potential of the sideways movement in the dollar, and pretty much that's what we've seen here. Just trading back and forth, not really breaking down, not really breaking out, and just the sideways consolidation. It's also been on a obvious parabolic move to the upside. So we'll see. The real line in the sand here to come up higher is really starting to accept, in my opinion, back over 107. Then we'll be looking for the equal highs back up into this 107.30 area. Of course, this would put more pressure on the markets. We may double top there. I don't know. It's a speculation, but of course, we will watch to see what happens as price moves into that zone. But nothing really bearish here to give the bulls any hope, and I'm trying to see everything from both sides for everybody. So, but as it stands, this just looks like, what does this look like? Kind of, one big bull flag basically. So we shall see. We're not even overbought, seeing any of those signs. This little cool down here has really reset the Momo, right? So plenty of room to move back up. I'm sure the weekly, though, might start to be telling a different story. Yeah, getting a little spicy on the weekly. So we'll see. But let's see, 107, that will be our level to watch. And of course, if we get over that and we start to move towards those equal highs, what's that going to do? It's going to put more pressure on the markets once again. All right, so I think that's everything. We went over TNX. We went over dollar. I think we're good for that. All right, so let's get into some levels that we will look into for the back half of the week. And let's go back to SPY. Now, we've already been over the potential short trade idea coming back here on the weekly range retest. So that's just one thought at that 418 basically. So we've already covered that one. Let's just look at some day trading fibs here. All right, now what do we have from this viewpoint? Well, are we seeing any confluence in that back test idea? Well, we do have a little bit here. It's not exactly to the T. It's never going to be. But what do we have here, right? If this actually ends up being the swing low, which I don't know if it will be, but we could trade back up here 50%, right at the 20, right around that 418 again. Boom, you look for the short. I'm more interested, in the short coming up here or coming up here versus thinking about trying to short at the open down here. Okay, that's for me, that's just not going to work out. Let's see about that gap too, because I really wouldn't be surprised if we're more than likely we're going to open as a gap down. I wouldn't be surprised to see us really make an attempt to fill that gap, and then we're just going to end up and close the day like negative 15, maybe negative 25, maybe positive 15, positive 30 cents, somewhere in that range, either plus or minus. It really wouldn't surprise me. Why is another reason why, what's another reason why I would think that? Well, although, yes, technically we had a trend day, again, volatility, now expansion as we've broken that weekly range, right? Now what's more likely situation? We're going to see some contraction. I don't know what the range is going to be, but we could just trade like this tomorrow as we look for some acceptance now that we've broken under that weekly range. And, I did, again, posted that to my Twitter and said we weren't going to see a big move until we break it. And, we did break it. And obviously from there we sold down, $3 or $4. So, it would make sense now to see some potential chop coming in, maybe at least tomorrow, where we try to fill the gap, come back in at the end of the day, we sell. or we sell a little bit in the morning, then we recapture, maybe one of those big trend lines that I was looking at earlier on those macro downtrends, and then we move back up. And we just kind of have that back and forth price action. All right, so let's get back to our fibs though really quickly here. If and it's a dangerous game trying to pick bottoms, right? As the old adage goes, we all know that about falling knives. So if that doesn't interest you, again, wait for the short, counter trend short. If you're, I don't trade shorts, I'm a bull only type of person. Let's wait for the 418 recapture. Then we can start talking about potentially coming up and looking for moves back into the 420 area, right? But as long as we're still holding under 420, it's real tough to get, be that confident in any type of long. So that's going to be the bare minimum. It would be recapturing the 418, and then, for any bigger picture counter trend move, that 420's got to recapture. So there are certainly two potential short trade ideas from this perspective coming up and then coming back down here. Again, I don't know if we're just going to bounce or what. I don't think that we would break and go down more, but anything can happen. Or we come back up, and if we are trading back over that 418, we can look for trades back up into this part of the range. However, you certainly have two short trade ideas coming up there. Boom, short it back to low. Boom, short it back to low. Maybe we get a bounce here. Again, I don't know, but ideally, you just continue back down towards the session lows. So, but if you sat out and you're one of those bulls, you're watching, maybe you take the short, or maybe you skip on the short, and we come back up to retest. Yeah, the long idea back up to make a potential double top, that's an idea too. That's a thought, and I think that also is going to depend on internals. So we'll keep an eye on that. That's also going to give us a little bit of that roadmap to say, okay, do I really want to be buying dips, or do I want to just be, really focusing more on the shorts? But again, be very careful for that chop price action tomorrow, as we did make a decent move to the downside. But you can really clearly see here how this just lines up. The other thing I did want to mention, and we're looking at the hourly, so this all happened when the market's been closed. But you could also start to say that this is, maybe a, from this move, yes, this is a 50% retracement. From the 8 o'clock price, no, it's probably about a 25% retracement. We've already been over that at length, looking for those 25 and 50% retracements, either to short into or as targets. So, all right. I think that's all I wanted to go over from this view. I guess, the only other thing I would say is if we really start to accept over that 420-30 area, okay, then we can start talking about some trades that might come up back up into the 423s, maybe 423, 70, 24 area, maybe. But I don't think it's that likely, but anything can happen. All right, that's all I've got for the fibs, because, I don't know about getting up to the 50 or any higher than that. I'd be pretty surprised, but the levels are there. And all right, let's look at some of our balance zones, and then we'll close it up. Again, thank you all so much for joining. I hope these videos are helping. Okay, where are we? Bada bing, bada boom. Okay. All right. Okay. Man, I really wish we weren't making this big of a move now. Okay, so from this viewpoint, and we're looking at a 30-minute chart here, we're really going to have to, back over 415, we've already talked about that level. and that being that POC that we were looking at on some of those bigger picture charts. 415, that recapturing and holding. Okay, I think that gives us a little bit of a chance for that counter trend move to retest. We may only come into the top of this balance here at 416 area and then reject. Certainly from this 30-minute perspective as it stands, we can reject there with this confluence at the 20, but you can see the 417.50 area, 417.70. We looked at that. 418. Basically, anywhere within that 30-40 cent range, we got to get back over this for those chances to come back up into 418, 419.30 area. But again, all potential short trades here. I mean, if we came up, maybe something I might try to do tomorrow is look for the long into that that structure retest up in this zone and then look to go short. But this kind of area here trading back and forth, this would kind of lean to more of my chop scenario that we could see tomorrow. So make sure you're being nimble, crafty, not too committed to either direction, because as soon as you think that it's going to break out of the chop, it just comes up and then fakes you out and then comes back down. So it's probably good to just be taking a little bit more profits quicker on those first scales, and just have those tempered expectations. But as it stands, let's see if we can open up and we're actually still above 415. For me, then, I might consider some longs back up into that area. But, really, if you want to wait, let's get over that 418 area first. Then we can look for trades back up into 418, 50, 60 area. Then maybe 419, 25, 30. Possible short trades there. We get back over the 30, 419.30s. All right, then we'll look for 420, 420.74, that zone at our half gap, right? I could see that also being another area where we may end up coming in and retesting as well. As you can see, all the reactions we had there before, probably a decent amount of liquidity in that area. I mean, the volume's not bad. It's not our POC. I wonder what it is on the hourly. I wonder if it lines up. No, it brings us to 422. Just look at the 10-day. No, okay. All right, not really. But so let's see. I'm going to be careful tomorrow. Let's see how the market's open. Keep an eye on internals. I'm not too keen on shorting the whole. I'm not too keen on trying to snipe a bottom. So I think just having some pre-market awareness and seeing where we are, taking a look at where tech is trading, if things are up or down, and then we'll have a little bit more of a better perspective on what the game plan should be as far as maybe trying those counter trend longs. Either way, be careful. Again, I really think my thesis is going to be up and down in both directions, more of a range day. But we've got some levels that we're looking at for longs if we're holding, some areas that we're looking at for shorts. If we do start to come back up, that will present to us a better risk to reward. So I think that's about it. Let's see what we get. Maybe we get 2 days of chop. Maybe we get one. I don't know. I think we're going to open up on that gap down, attempt to fill it, and then we'll probably roll back over towards the end of the day, or maybe midway through the day. But that's just my wild guess. Either way, we've got our level, so let's just trade our plan and plan our trades. Again, thank you so much for joining me on the video. I really appreciate the support. What do you think's going to happen for the rest of the week? Would love to know what you think in the comments. So leave them down below. I love reading the what you guys think, and certainly will reply to those comments. If you haven't already and you're liking the video and the content, it would mean a ton to me if you hit that subscribe button. The thumbs up also is greatly appreciated. It means a lot to me. And again, thank you guys so much for joining me as we prepare for the markets every week. Plan your trade, trade your plan. Let's have a great end to the week, and I wish everybody a good rest of the evening. All right, take care.